GM everyone. We'll just wait for a few more minutes, get everyone on board as speakers, and then get started. Meanwhile, I'll also give some time for people to tune in. Should be a very exciting space. We have the biggest Bitcoin liquid staking protocols here today to discuss the exact same thing, which is BTC liquid staking. So just give us a few more minutes and we'll get started. I think we do have everyone as speakers. Just waiting for Mikhil, who's co-founder of pSTAKE, to join in. I think meanwhile we can get started. Nick, are you here? Can you hear us?
Yes. Hi everyone. Happy to be here.
Hey, how's it going, Nick?
Yeah, it's good. It's been good. And yourself?
Doing well.
Nice.
So, are you just is Solv just your designation, or it's also something that you do there?
Yeah, it's a designation.
Nice. Yeah, I mean, I think crypto is run by interns, right? That's how the space works.
Yeah, exactly.
Yeah, happy to have you here, Nick. I believe we have Nathan from Bedrock.
Hey guys, it's Adam actually. Nice to meet y'all and happy to be on space.
Oh, so sorry about that, Adam. How's it going?
Great. Just past evening here. Hope everybody's well over on their end as well.
Nice. Where are you speaking from?
So I'm based in Malaysia myself. But yeah, we're actually a Singaporean company.
Oh, that's nice. I think two great places to be in from crypto's perspective, right? Singapore and Malaysia.
Yeah, I mean, there's great food all the time.
Nice. How was Malaysia Blockchain Week actually? I think it was just last week, right?
Yep, just happened a week ago. Unfortunately, I did not attend myself, but I heard many good things.
Amazing. Nice. Yeah, I think we have also Shujia from Chakra. I'm so sorry if I got the name wrong, but hi, welcome to the
It's
space.
totally fine. I mean, it's I will go by Nathan. It's fine. It's more of my crypto name.
Okay, understood. How's it going, sir?
I'm doing good. We are like finalizing our next product launch of ZK aggregator. So I'm actually working on this. But glad to be here with all the participants in the next round of BTC liquid staking.
Amazing. Nice to have you, sir. I have to ask: is the cat just a random pick? Is that a meme coin, or is that actually your cat?
It's actually my cat. Yes.
Oh, that's nice.
Well,
Yeah,
I have
great to
two
have.
more actually.
Oh, so this is just the favorite one.
Yes.
Nice. I think it's actually International Cat Day today or something, right? I think I saw some meme coin post from some account today. But yeah,
Yep. I mean, if they wanted to, like mint NFT or something, please feel free to let me know.
I think cat memes on ordinals or BRC20s. That's the real flippening, right?
Yep.
Awesome. And finally, we have Mikhil here. Hi, Mikhil.
Hi Aditya, hi everyone. Good to be here.
Awesome. And where are you speaking from today, Mikhil?
Dubai. I'm back home finally after a long time away from home. So it's super hot outside. So I just have to sit on my desk for the whole day. It's bullish for pSTAKE.
Yeah, love to hear that. Awesome, guys. Without further ado, I think we can get started. So we're just going to have a chill, I think, 45 minutes to 60 minutes talk to just discuss BTC liquid staking. We have, possibly the leading protocols that are building for Bitcoin in terms of BTC liquid staking, especially. So we'll get to know from everyone what their perspective, what their hot takes included is about this niche that is quickly growing, and then just chill with everyone here. So firstly, maybe we can go around the table with quick introductions, and also your own personal Bitcoin journeys. Maybe Mikhil, you want to start first?
Actually, just give me a couple minutes, please. Sorry. There's some cleaning happening in my room. Just one moment.
No worries. Nathan, do you want to go?
Yeah, of course. Good to see everyone. This is Nathan from Chakra, chief scientist, and I'm currently based in SF, but I'll be in Asia till the end of September. Like I said, we are currently working on the ZK aggregation infrastructure. So we're gonna help all of the LRTs and LSDs do their settlements. And great to see you guys, and love to answer any questions.
Awesome. And is there a specific, let's say, story or tale to tell about, how you started with maybe, just Bitcoin in general?
That's a great question. So basically, there is a blockchain club in my undergrad. It's originally called Cal Blockchain, but now it is known as Blockchain at Berkeley. So we start mining Bitcoin in Soda Hall when I was a sophomore. So and school almost kicked us out and forced us to give out all of our gains for utilizing like school's computational resources to just mining this stuff. So yeah, that's quite unfortunate. If I'm able to secretly keep that, I'll be rich.
Oh damn. That story comes from the trenches, man, properly. Yeah, well, that's so interesting. But yeah, happy to have you here, man.
Mhm.
Next up, Adam, do you want to also quickly introduce yourself, Chakra, as well as sorry, Bedrock, and also your Bitcoin journey?
Yeah, for sure. Thanks for having me once again, guys. So I'm Adam, the head of marketing at Bedrock. And so my personal crypto journey began back in 2014. Those were the days of faucet hunting and mining crypto yourselves, right? And I believe it was a very black hat thing at the time, but I'm so glad it worked out well and Bitcoin became mainstream after all this time with all the innovation happening around. And yeah, Bedrock is basically a multi-asset restaking protocol. And so we currently accept three liquid restake tokens, mainly Bitcoin, Ethereum, and IOTX as well. And we're setting the stage for bringing Bitcoin restaking to the masses. So I'm really excited for that.
It's amazing, sir. Great to hear that. I think you mentioned faucet hunting. I believe that's still the case with SBTC, right? I think it's still hard to come by if you want to test something out for the Bitcoin network. But we're definitely getting there. Yeah. Nick, do you want to go next, please?
Hi, sure. Thanks for having me. Excited to learn a lot, learn from other speakers and delve deeper into the topics that we'll be discussing today. So my name is Nick. I'm Solv intern. My journey with Bitcoin. I'm not as OG as everyone else here. I first heard of Bitcoin in 2017 when it made its run up to 18,000, and during that time, when I first heard of it, when you want to buy when I wanted to buy Bitcoin, it was like you had to go through some forums and you had to do some P2P stuff. I mean, back then I just thought Bitcoin was a digital currency. I didn't really look deeper into it, so it was very sketchy and unfamiliar to me. So I didn't get into Bitcoin back then. But as I learned more, I came to understand that it's not just the technical aspects of Bitcoin that's really cool, but also the broader vision and spirit behind it. Yeah, so I guess that sparked my interest in the crypto space and also led me to where I am today, and where I'm excited to contribute to Solv's mission to build a decentralized Bitcoin reserve.
It's amazing to hear, sir. Welcome again. Finally, Mikhil, if
Yeah,
the cleaning is done, do you want to go next?
it's all clean now. Yeah. Hey everyone, this is Mikhil and I'm the co-founder of pSTAKE. I've been in the space for officially about 5 years now. And I actually started my journey off with Ethereum. I got excited about smart contracts when I was still in uni, graduating. I was studying engineering and uh, stumbled upon smart contracts as a thing. Looked into Ethereum, got excited about it. Ended up doing something in Cosmos. I don't know how that happened, but here I am today building for Bitcoin. I think we've seen, we started off building around proof of stake in 2019. So proof of stake was not that cool a thing. 2020 liquid staking was not that cool a thing until Lido launched and really dominated the Ethereum liquid staking market. So we were building liquid staking for Atom before Lido went live, and did quite a bunch of things around that. I think actually I've always believed in the idea of staking, liquid staking, cash flows in general, because it is what the world is built on top of, right? So yields is what drives everything. So we started looking at LSTs in 2020, but today after learning so much about LSTs, what we've realized is there's just one thing that matters, right? When you're building an LST, which is the demand for that asset. And we've been thinking which asset has the most demand when it comes to uh, just like, natural demand of an asset, and that's Bitcoin. So naturally gravitated towards Bitcoin, and Bitcoin stands for so many things that I believe in, and my portfolio kind of gravitates towards Bitcoin today compared to in the past where it was so ETH driven. So like started believing in everything that Bitcoin stands for, which is freedom, sovereignty, and the fact that it is truly a hedge against the world that we live in today, right? You look at all these wars happening, proxy wars in different parts of the world, and you would realize that it can happen. The war can extend beyond what it is today, and in the moment like that, what would you like to hold? For me, it's gold and BTC, and that's kind of why we want to build for BTC. Also, the fact that it's the only asset that has the most amount of demand and will remain to have that demand. If anything, the demand is only going to increase, and to build liquid staking becomes a lot more exciting then. So yeah, that's my journey into crypto and Bitcoin.
Always a pleasure to hear that, Nikhil. And I think you rightly pointed out, I think Bitcoin is that hedge against the world. It's often called digital gold, but with protocols like Solv, Bedrock, Chakra, and pSTAKE, it's becoming a digital gold that also becomes yield generating now. So very bullish for crypto overall. Awesome. With the round of intros out of the way, let's actually get started. And firstly, maybe for our listeners who are not that well versed with Bitcoin liquid staking, because it is a phrase that maybe 2 years earlier we couldn't have imagined, talking about a lot and also making it part of crypto lingo in a way. So, does anyone actually want to explain what staking is before we get to liquid staking and then also BTC liquid staking?
Yeah, maybe I can go. Oh, no problem. I think staking in very simple terms is essentially like a way for a participant in a network or on a blockchain, have some risks associated and participate in growing of the blockchain. So how do blockchains generally work, right? You have a bunch of transactions, Aditya sending some assets to Nathan sending something to Solv in turn. All these different transactions happen on a blockchain, and these transactions are picked up by certain network participants. These network participants essentially run hardware, software that allows them to pick up these transactions and put them in a block. As these transactions go in a block, they are ordered, and after these transactions are posted in the block is proposed. Every other network participant or validator looks at the blocks and then says that, okay, this block looks to have all the legit transactions. There's nothing malicious. The validator did not just propose any random block which shouldn't have a transaction that it has. So that's the basic principle with which block proposing works, right? And after a bunch of blocks are proposed and they form a chain, that's the blockchain. Right now, if the proposer of the block is not an honest actor, it may lead to a loss of funds for somebody or stealing somebody else's funds. All those problems can occur. How do you prevent the validator from being dishonest? It's by asking that validator to post a bond or something at stake. In the real life, the things that we put up at stake are generally of economic value, right? So proof of stake blockchains essentially allow you to stake some of your assets, which means, let's say you have Atom or ETH. Let's say Atom, Atom on the Cosmos network. You stake your Atom on the network, thus allowing you to propose some blocks on. And when you propose blocks, you get something in return, which is the staking rewards. So you get the staking rewards or block rewards by proposing blocks or signing attestations to the blocks. And then but if you sign a malicious block, or you propose a malicious block, a portion of the assets that you staked on the chain is slashed. That is slashing. So essentially, staking in very simple terms is a mechanism that allows the blockchain to be legit and relevant, and is a way for people to participate in network consensus, earn some yields by doing so. I think that's what I'd say staking is. With Bitcoin, there's no staking because Bitcoin is a proof of work network. It's not a proof of stake network. But BTC staking is a concept that I'm sure we'll dive into.
Yeah, absolutely. Thank you so much for that comprehensive answer. I think the great way to summarize what you also said is that staking is essentially just a coordination mechanism for blockchains in a decentralized manner, wherein there is actual capital at stake, both in terms of locking up as well as losing of capital. With that out of the way, maybe Adam, do you want to talk about what liquid staking is and how does that come into picture here?
Yeah, sure. I think Mikhail definitely nailed the head on that one. Um, so just to add on a little bit, like I think Fisher, Babylon's co-founder, he's always emphasized that um, to have staking is the ability to have slashing occurring on malicious actors. And that's one of the basic principles that they built the Babylon timestamp protocol on, and how we've arrived with Bitcoin restaking today. And so, yeah, coming to the question. So liquid staking is essentially the same thing as staking, but in return, when a user stakes their token, for example, Ethereum, they will receive a liquid stake token in return, which represents their staked assets. And what this means is that if you hold UniE, for example, which is Bedrock's liquid restake version of Ethereum, you'll automatically be accruing staking rewards on that token. And the beauty about liquid staked or restaked tokens is that you're able to participate in any type of DeFi, whether it be lending and borrowing, index funds, or providing liquidity on DEXs as well. And this is able to generate additional yield for everyone on top of the additional points that we're seeing protocols giving out all over the place. So yeah, I hope that pretty much explains what liquid staking is.
Yeah, absolutely. I think you put it very well. It's just a liquid receipt token that you get as a representative of your locked capital that you can use in DeFi to generate more yields, as well as kind of also overcome some of the hurdles of staking, which is mainly the lockup period that is usually present. Nathan, do you maybe want to touch upon how does Bitcoin now come into this landscape? Nikhil mentioned what staking is. Adam explained what liquid staking is. So where is Bitcoin coming into this picture all of a sudden?
Yeah, of course. So basically, I can talk from the angle of Chakra because we are more on the infrastructure side. How to say, one level deeper, comparing to the LSD and the LRT protocols regard to the native BTC asset. Because basically, our role is that we're able to actually help them to gain the liquidity and settle their liquidity, especially the native BTC, to the target chain through us as a settlement layer. So for specifically for BTC and where it is coming to play, because we are discussing with Babylon, right? So basically the whole theme is about the native staking. So the one thing or one concept that that Chakra has created is called settlement primitive. What settlement primitive mean is that we use that to convert BTC or other asset into the settlement artifact, which also encompasses the reverse process where it is able to convert back into BTC, just like what the LSDs and LRT are able to do on Ethereum. So basically, specifically for Babylon, there will be an example on our documentation. But long story short, is that for BTC deposit on the BTC network from the BTC network into their staking wallet, for instance, like Cobo or like Fireblocks or Cubist, um, Babylon is able to record this specific staking transaction, and it creates a delegation record um, through us, which is from Chakras. Um, Babylon will notify us of this new delegation record via our IBC integration channel. And then we will mint the Babylon Cobo settlement artifact on our network upon receiving this notification. So basically, we open through this channel for all of the liquid staking protocol and the restaking protocol to gain the native liquidity of the BTC, which is quite, I will say it's quite innovative and useful for all the projects on the stage.
Yeah, absolutely. I think you've explained a very intricate mechanism here, and I think the liquid staking game in a way is kind of a network effect game, right? I think liquidity is everything. If you don't have size to get out in an event that you want to get out of your position, that kind of defines how successful a liquid staking provider is going to be, right? So if it is about access to liquidity, that's what everyone would want.
I mean, to be honest, we have optimized like small amounts of transactions. So basically, the total cost of that will be much smaller compared to on Ethereum. But I mean, things it's like divert everything everyone else from the topic, so I won't continue discussing about it.
Understood. Yeah, you can keep that for sure, man.
Yep.
Yeah. Coming to you, Nick, I think Chakra, Nathan explained from an infra perspective of how Babylon and maybe liquid staking is going to work. But from Solv's perspective, who is kind of a liquid staking protocol built on top of Babylon, what exactly is Bitcoin liquid staking in that context?
I think I can give you a background on why Bitcoin staking is recently becoming a thing. I guess this is because Bitcoin in the past, I mean, Bitcoin is based on the proof of work consensus. So previously, before Babylon, it was just not possible to stake your Bitcoin to gain staking yields, right? So um, in the context of Babylon, what Babylon created is that they created this self-custodial Bitcoin staking where Bitcoin holders can finally similar to EigenLayer, they can share their economic security with other networks, and in exchange, they get a staking yield from these POS networks. Why do I think that Bitcoin will be a more preferred stakeable asset? Is purely because of Bitcoin's the attractiveness as an asset. So, with the recent Bitcoin ETF approvals in the US, we can see that there will be structural flows that eventually come into Bitcoin, where pension funds will allocate a portion of their funds to Bitcoin, and eventually every month you will see that a portion of income from people will eventually go in Bitcoin, and that is why we at Solv are very bullish on Bitcoin and the future of Bitcoin as a staking asset.
Yeah, absolutely. I think the ETF does give a kind of a stamp of approval. Not that Bitcoin needs any, but it gives maybe that trust that might be lacking in some traditional finance institutions or even individuals to look more actively into this. And then I think Bitcoin staking does become that kind of a risk-free rate of yield that Bitcoin can offer. Maybe Mikhail, do you also want to touch upon why BTC as a staking asset can be a game changer? Because what we've seen is proof of stake has come from the likes of Tezos and Cosmos. We've seen Ethereum adopted in a sense of the blockchain itself, but like you mentioned, right, BTC staking is not Bitcoin network moving to a proof of stake network, but BTC, the capital, the asset, kind of becoming a stakeable asset. So why do you think that makes sense overall?
Yeah, it's a very good question. I think I've talked about this or tweeted about this in the past, not so long ago. I think it's a very simple answer. When you look at something that's stakeable, right? Proof of stake, the idea for proof of stake was to have something at stake, which is of economic value. So, what makes a good stakeable asset, right? I think it's the fact that the asset has strong economic value, is liquid, is less volatile, because the moment the market crashes, what ends up happening is these proof of stake networks, their economic security just reduces drastically at the same time, because all of these proof of stake chains are secured by the native assets. So when ETH goes down, the security of the Ethereum blockchain goes down with it. When Atom price goes down, the security of the Cosmos hub goes down with it. Same for Sol. But what if these chains are secured by an asset that's value is so huge, and the asset, when BTC falls 5%, every other asset is probably around 15-20%. We've seen this very recently, right? BTC down 10%, ETH down 20-25%, right? So it's always the most stable asset, given the nature of the industry that we operate in, which is obviously already very volatile. So I think it's very it's less volatile, which makes it a very interesting asset to stake. It has high economic value, which means it can actually provide a lot of economic security to proof of stake chains. And there's no yield on BTC today, right, which makes it even more interesting because there's no inherent yield to BTC. So the moment you have any form of yield coming to BTC, people are looking to stake that asset and earn those yields, right? So although it comes with certain risks, which we can talk about, but the fact that there's zero yield on BTC. Imagine, like you're restaking your ETH. You get 3% as an example on staking ETH or liquid staking ETH, and then to restake it, you get after restaking at 3.3%. So the increase from 3% to 3.3% as an example is marginal, is not so big. But the increase from 0% yields to 1%, 2% yields is actually not marginal anymore. It's very significant, right? So uh, the potential to earn any significant amount of yield on BTC is very, very interesting. And it's a neutral asset, right? It's not tied to anything. It's a hedge against, like I said, against the world that we live in today. So it is a bet that, if everything lives on the blockchain tomorrow, and that blockchain does not need to be the Bitcoin network, but let's say, the chain is Ethereum or Solana or any other chain, Monad, Bera chain, whatever that looks like. If most of what happens in the world happens on the blockchain, then those chains can't be secured by the native asset of those chains. It has to be secured by something that can survive in really, really, stressful or situations of distress in the world. And that's Bitcoin. So yeah, that's my reasoning for why Bitcoin makes a very good stakeable asset.
That's a great answer, Mikhail. I think you very well highlighted that this is the first time BTC as an asset is getting yields, because what we've seen so far is BTC as store of value, as speculation capital is that is just sitting idle on the sidelines. So it's definitely going to be interesting to how it changes the dynamic, especially for DeFi. And maybe that's what we can talk about and get everyone's thoughts actually on this one by one. Is the fact that this is the first time in Bitcoin's history that we're going to see inherent native yields coming through these other blockchains. So how do you think that is going to change DeFi for the good? Maybe Nick, we could start with you.
Okay, sure. I think what Mikhail's I think I'm gonna echo what Mikhail said earlier. Where with Bitcoin liquid staking, Bitcoin staking, we see yields for Bitcoin rise from 0%. I mean right now you can actually get like 0.5% to like 1.5% on a lending protocol. But but with Bitcoin liquid staking, we can actually see yields increase from there, and that is where uh it 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 makes Bitcoin as a asset a lot more attractive in DeFi. And what this means for DeFi, I would say, is that it would bring in a lot of net new liquidity, mainly from Bitcoin mainnet. So in reality, actually, there's only less than like 5% of Bitcoin in DeFi in the crypto world on chain. Most of the Bitcoin are still idle on the Bitcoin mainnet. So with Bitcoin staking, we are hoping to see that there's a lot of all these Bitcoin holders that realize that, oh, it's actually worth the risk to actually um, go into DeFi to capture these Bitcoin yields. Other than that, I would say that this would also increase a lot of Bitcoin liquidity in all these DeFi protocols, and in return increase a flywheel for a healthy BTCfi ecosystem, and that's what we are very excited to see.
Absolutely, I think you highlighted a very good point that DeFi has been kind of stagnant so far. Ever since maybe the DeFi summer as well. I think it was Arthur from Defiance who tweeted out saying that DeFi has been dead since the top of the last cycle because there's not been any new activity or any new things that have happened. And maybe it is Bitcoin that brings this resurgence for DeFi overall. But from your perspective, as well as from Solv's perspective as well, because Solv is present multi-chain like a few other protocols here too. Where do you see this liquidity kind of flushing in? Do you see it happening on Ethereum mainnet, on BSC, Bitcoin L2s, or maybe throughout across all these chains? Because the fact is that there is 1.5 trillion dollars that is sitting idle. So what are your thoughts there?
I think it all depends on the entry points to DeFi, right? So, for example, like the BNB chain, BTC holders can actually bridge their Bitcoin from the centralized exchange from Binance the BNB chain easily, and that's why we see that that's sort of a, I would say in the entry point to DeFi, it's a lot relies on the UI UX as well. I feel that a lot of non-DeFi native people they'll find it quite intimidating. I mean, myself, when I started off, I felt that entering DeFi is actually quite intimidating. Like, you want to send your money, your Bitcoin or your ETH to some other address. Having one mistake in your address could lead to your funds getting lost, and there's no way to get a refund. So I would say that we see that the bridging from Bitcoin to DeFi to EVM chains is all about the user experience, and also I think we see a lot of all these solutions coming up in the past few months. People offering an easy entry point for Bitcoin mainnet to actually move to EVM chains, and yeah. So in terms of a specific chain, I don't have a specific chain. It's more of a different channels to sort of bring Bitcoin to DeFi. Yeah.
Yep, I think it's the destination that matters, or maybe the result that matters, which is flourishing BTCfi ecosystem. Amazing. Adam, do you want to take the same question next, which is how do you think Bitcoin entering DeFi landscape, or Bitcoin having native wheels is kind of poised to change DeFi?
Yeah, sure. I think having $1.2 trillion worth of assets coming into DeFi, whether it's Ethereum or Bitcoin L2s or even EVM L2s, would be super interesting to see. At the end of the day, it's talking from a liquid restaking perspective, it's about bringing in the liquidity and what we can offer the DeFi ecosystem. For example, from Bitcoin, which is the least volatile crypto asset, and being able to collateralize that while earning yields on top of that to borrow more volatile assets out there. As the Solv intern mentioned, this is a flywheel that would probably be very beneficial for other tokens out there. We will probably start to see not just the liquidity enhanced, but crypto assets being less volatile due to this fact. Another good point to make is that with Bitcoin restaking being included in DeFi, at the moment, Bedrock has this thing going on where we allow Bitcoin restakers to add liquidity to the Velodrome pool on Optimism. And currently it's sitting at about 120% APR, if I'm not mistaken. So imagine just restaking your Bitcoin, bridging it to an L2 like Optimism, and if you add in one Bitcoin worth of liquidity in 1 year's time, you're going to see 2.2 worth of Bitcoin in your wallet instead. And that's going to provide a lot of incentive for users to actually hold Bitcoin now.
Yeah, that's very well put. I think what you mentioned about less volatile asset like Bitcoin is more suited for DeFi, right? And it also helps not just the shared security aspect of things, which is Bitcoin securing other chains. It's a big reason that the less volatility helps there, but also in DeFi at the same time, wherein you'll be able to see these robust protocols become even more robust because the collateral at hand is an yield generating Bitcoin token. I think it's a it's becoming a common phrase wherein a lot of people are saying that DeFi or Ethereum was all just a testnet for Bitcoin. So it'll be very interesting to see how things kind of evolve. Yeah. Finally, Nathan, do you also want to take a shot at the same thing? How do you think DeFi changes after Bitcoin becomes yield generating?
For sure, yeah. After we are able to bridge in the native BTC liquidity, because given the fact that both the volume and the amount of asset staked into related to BTC is still like more than half of the entire crypto asset. I totally agree with what previous people have said, that it's gonna change the entire market, given that first, I've heard rumors from pension fund that there will be about like 0.5 to like 1% of the pension fund is going to be allocated to BTC pegged ETFs, and also some of it are going to be pegged into allocated to the Ethereum peg ETF, but mostly are going to be BTC relevant. And also, I'm not sure if you guys been to Nashville for the BTC conference this year, and both presidential candidates are there, and we can. I mean, hopefully, although there are a little bit of market sentiment recently, but hopefully, whoever get onto the stage by the end of this year will help the entire BTC ecosystem to boost. So that's a second upside of the BTC's contribution to the ecosystem. And for the strategies that have been repeating on Ethereum ecosystem, after we are able to technologically resolve the native BTC staking issue, composability and the strategy wise can be implemented as well. So we will roll out some of the documentation and examples regarding how to implement the strategies with Solidity, and feel free to stay tuned. And we hopefully that you guys can be like the first wave of first wave of developers and early stage participant who are able to work on the BTC strategies.
Yeah, I think that's a great point from multiple perspectives of how things would change in terms of BTC as well as DeFi. I think it's definitely a question of when and not if when it comes to that allocation aspect. I think it's bound to happen that not just DeFi protocols or even institutions. It's going to be sovereign nations that kind of put money into what is maybe the most sovereign form of money that exists. Lastly, Nikhil, do you also want to take a jab at the same question? Because you've mentioned that you got into Ethereum quite early. You've seen the ETH DeFi summer pop up. You've seen Abracadabra, all these Ohm DAO things happen. Do you think we see similar kind of things for Bitcoin, or do we see a very different kind of DeFi with Bitcoin?
I think it's gonna be different, right? Every cycle has its own flavor. I think what we saw in DeFi last cycle was very experimental, right? The whole concept of pool twos and farming YAM and all these other coins, those were very, very new concepts. But today what we've seen is DeFi also has gotten to a point where innovation is not really 0 to 1 today, to a large extent. Obviously there are still some protocols that come out with 0 to 1 innovation, like Athena, for example, right? Is in a way they saw the basis trade arbitrage, they tokenized it, right? They created something interesting around it, but very few, we see a repetition of what was being built in different forms, optimized. So I don't think it's going to be any different. My view is that there is no such thing as BTCfi, because we have two things that we say, right? TradFi and DeFi. You don't say within TradFi you have USDFi or GoldFi or whatever, right? Similarly, DeFi, I think, the reason why it is where it is today and it's stuck at this point is because you have, like, what is DeFi, right? You have Ethereum. On Ethereum you use ETH to participate in DeFi. On Solana you use Sol, and that is very limiting because the maximum size with which you can do things is limiting, right? What we really need is trustless bridging for BTC, so that we can bridge BTC out and have roll-ups, right, that roll up to the Bitcoin network and leverage Bitcoin's network security, BTC's actual security. Then that becomes interesting. So for me, like, I don't think DeFi is going to look like very exciting or sexy, but it's going to be very meaningful and impactful with the use of Bitcoin in DeFi, because that's the asset that everybody wants to use. Like, you're not going to take a loan on your on a random shitcoin and be okay with it. But if you're using a Bitcoin asset, whether it's the native Bitcoin itself or a LST version of Bitcoin, you'd be a lot more at peace. So I think BTC in DeFi is what I believe we are headed towards. The world is going to be a lot more exciting when you can use an asset as good as BTC in DeFi. So yeah, I think that's pretty much my view. I don't think it's going to be like, oh wow, this is BTCfi, yes, let's ape in here there. I think most of what was exciting was in the past. Now is about getting the market to mature to a place where everybody can come in, institutions, family offices, large holders can start doing things with their assets on chain, and that can only be enabled by Bitcoin and more improvements in infrastructure on other DeFi chains.
Yeah, absolutely. I think long term and boring doesn't really sound that bad when it comes to DeFi and Bitcoin because, like you said, it shows sign of maturing, which is the right step for the DeFi industry overall, right? So, yeah. Awesome. Lastly, maybe we can touch upon a very interesting topic actually, which is what has gotten Bitcoin really going has been that hedge or that store of value against pretty much everything else, right? If it is a hedge for gold, it's Bitcoin. If it's hedged towards the condition of the world, it's kind of is Bitcoin. But now that we have DeFi coming into the picture, do you think from a purely narrative perspective, because this industry is also very much driven by such things, right? Now, the fact that we'll have one too many things going for Bitcoin, do you see that as a net positive or a net negative for Bitcoin?
I think it's net. I mean, it's hard to say, right? Like I don't know. I can't look into the future, but I think it's good to see innovation happening and different things being tried out, experimentation. So that is generally a net positive, which leads to some short-term negative effects as well. But overall should be net positive.
Yeah, I'll just add on here as well, like not financial advice, of course. I think at the end of the day, we have to really take a step back and look at Bitcoin's tokenomics as a whole and economics in a way, and how Bitcoin's supply per block actually reduces every halving, and how investors have been following maybe the stock to flow model or maybe the power law model in determining the value of Bitcoin all this while. And that leads that brings a very interesting question when we talk about miners. And because miners are actually dependent on the Bitcoin production cost, and these miners, they gotta eat, right? So they basically have to sell some of the Bitcoin that they mine into the market to cover their operational cost, their rent, their hardware, and things like that. And we just don't know yet whether this will bring a positive or negative impact to Bitcoin's price. Just for example, since miners are more obligated to mine Bitcoin and restake, and on top of that, gain additional yield for just restaking their Bitcoin. And if they liquid restake, they will gain even more yield, for example. This may cause them to hold on to their Bitcoin for longer. But I think the opposite can also be said, where the Bitcoin production cost will go down in that sense. And the opposite can also happen where they will offload their Bitcoin more frequently because of that. So I would say it's really gray at this time, and we won't know till Babylon actually launches its mainnet.
Yeah, absolutely. I think Babylon being one great source of yield for Bitcoin. I think there are a lot of Bitcoin L2s also coming up with native staking, like Botanics, Morlin, and a few other. I think it'll definitely be an interesting dynamic to see how minor behavior changes because of these things. because it does give them an additional source of some kind of yield to their BTC holdings for transactions that go through. And it'll be very interesting to see how those changes, because we've seen it in the past when ordinals first came into the picture. We saw for the first time transaction fees kind of overtook mining rewards that were generated in a single day. So I think that does make the system more sustainable. And like you highlighted, if it's positive or negative, only time will tell. Yeah. And finally, maybe I want to ask Nathan from your perspective, because you mentioned Chakra sits kind of a layer deeper when it comes to liquid staking protocols, and with the context of BTC staking, Babylon, LSTs on top of that. How do you think like these liquid staking protocols like Solv, Bedrock, pSTAKE, they can work together in this kind of ecosystem?
I think at this point of time, I think the most important thing is the education, right? Because we are in a bull market and we get a lot of new entrants to the space. I would say that how we can work together is more of educating the newcomers to the space on what Bitcoin is all about, what are LSTs, and as well as how all of these tie in together, right? So I think that's at the end of the day, it's really just learning, and also educating uh, the our audience, and that will lead to a sort of a multiplier effect on the whole ecosystem in itself. Yeah.
I think another important thing is that to at least try to avoid the homogeneity of different LLCs and LRTs, because I think the industry has been has been going through the similar process in Ethereum industry, right? In the Ethereum ecosystem, right? So similar functionalities of liquid staking token and liquid restaking tokens on different ecosystem, different layer twos, different execution layer, and then on different VM, on different narratives, but building the same thing, right? Since BTC has already like I said previously, right? The whole volume and the whole amount of total amount of asset on the BTC ecosystem is actually much larger than Ethereum, so it's okay to begin with. A lot of startups in BTC ecosystem, they work on like similar concept, just like in the traditional industry and Ethereum days. But we need to keep in mind that those existing elephants, the big elephants in the room in Ethereum ecosystem, they are gonna apply their previous experience on how to win over other competitors to touch base into the BTC ecosystem. And basically we are not, like an empty space, right? Or a free space that a lot of startup is able to expand freely, right? So we have a lot of existing players that we have to keep in mind, and we need to make sure that just like what people have said previously, that both educating people and try not to overlap too much on the scope will be optimal.
Yeah, that's a very very well put point, in terms of not just the nitty-gritties of multiple liquid staking providers existing, but also from a very zoomed out perspective. And I think it's safe to say it'll be the most exciting space to watch, at least in terms of crypto, for the next few months and years to come, with BTC at the center of everything. Awesome. I think it was lovely speaking to you all, gentlemen, today. What we can do is just quickly go around the speaker table once, and can ask folks to kind of share what's the latest going on with your projects, and also what is one thing to look forward next, that everyone should keep an eye on. Maybe Nick, you want to go first?
Yeah, sure. So I guess one interesting thing that happened last week is that the core second ignition drop launched, and we found that many of our users actually enjoyed 20% APY by bridging their Solv BTC to participate in Core's ignition drop, which is Core is basically a Bitcoin chain where you can actually use your Bitcoin there to participate in DeFi, and they are having their incentive program as well. and also on future announcements, we are currently have some developing exciting developments for all of you, and we can't wait to share what our team has been working to expand our LST's use case. So yeah, stay tuned.
Awesome. Thank you so much, Nick, for joining again today. Adam, do you want to go next?
Yeah, thanks, Aditya. So I would say at the current moment, Bedrock has about 180 BTC restaked to us, and we've just launched a cap for restaking, and we set it to 250 BTC at the moment. So there's quite little space left. So I recommend everyone jumping on board and trying out Bitcoin restaking for yourselves if you haven't just yet. We support Bitcoin restaking on 6 different chains and have DeFi as well. We are running this campaign called the Bedrock Optimism Splash, where we're giving away 50,000 in OP tokens back to Bitcoin restakers on Optimism. And this is bringing in huge yield to our DeFi ecosystem on Optimism as well. So yeah, just feel free to try out not just one, but everybody's Bitcoin restaking protocol. And feel free to experiment as well.
That's amazing. Lovely to hear that, Adam. Thank you so much for joining again today. Nathan, do you want to go next?
Of course. I mean, I have been promoting Chakra throughout this entire space, so thank you for letting me do that. And for the most recent progress and the latest update, we're gonna roll out our Cosmos version of our testnet phase 2 within 2 to 3 weeks. That's one thing. And second thing is that there will be more promotion campaign together with not only with Binance but also with other exchanges and big stakeholders of BTC assets, and in the coming month. And also in terms of the technical side, we are currently working together with the Startnet team in order to use Start to bring the DK aggregation layer to production. So yeah, please stay tuned, and we will let you guys know soon.
Awesome, Nathan, and thank you again for joining. I think Nikhil had to jump off for something that came up. I can maybe give that context from pSTAKE's perspective. I think one of the biggest things for all of us combined was the Binance campaign that was live for a week until yesterday, if I'm not wrong. I think that was a huge one to kind of set the stage for Babylon's launch, as well as bring more visibility to Bitcoin liquid staking, because I think we work in this particular niche of crypto, and we it becomes an echo chamber that we feel that okay, fine, everyone knows about this. But I think it's very much the case that not a lot of people, not just the Twitter side of things, but in general also, are not that well versed with what Bitcoin staking is, or even heard of people like Babylon in the first place. So I think there's definitely a lot of room to grow. And for pSTAKE's perspective, what's coming next is the YBTC launch, which is pSTAKE's yield Bitcoin token, which will launch on Ethereum natively, and be deeply integrated into DeFi on Ethereum and L2s. So that's something to look forward for everyone. Yeah, and I think with that we can call it a day. Thank you so much everyone for joining us today. We've spoken about what staking is, what liquid staking is, why and where does Bitcoin come into the picture in terms of Bitcoin liquid staking, how everyone thinks that BTC liquid staking is kind of going to change the game for DeFi overall, and how we grow from here together as an industry, as well as a small niche maybe right now in crypto, but soon to become maybe the number one category by TVL on DeFi Llama with Bitcoin. Awesome. Thank you so much, everyone, for joining again. Have a good rest of the day, evening, and night, and we'll catch you in the next one. Thank you so much, guys.